Good morning, sorry, good evening everyone. This is Srikanth Rajan and welcome back to the Market Pulse video where we discuss about the market that happened last week and also what could be expected next week. So talking about the market last week, of course, the markets were in a continuous bearish mode, of course, with some consolidation in between. But then it was so fearful that on Thursday, on the expiry day, that is on the expiry day where we had the Bank Nifty and Nifty expiring on the same day as it was a monthly expiry, the markets actually fell so much that it even broke 19,500 on the bottom. But then after a quick recovery just before the market closing, it closed about 19,500. That is a great sign indeed. And then Friday we could see the markets actually recovering well and close about 19,600. But one important thing to understand was the markets have hit a high of 20,200 and from there has had a very good correction. From 2200 to 19500 is almost 700 point correction that we had in this month, and after that the markets are looking stabilized. Now the question, of course, as you see in the title, is that should we exit or enter the market at this point of time? So definitely I would say at this point of time it is a great entry time. That, of course, like we always say, a great fall is always an opportunity to enter in SIP mode. A SIP mode of investment is of course recommended in the stock market, and that can be in direct stocks, that can be in by a PMS, portfolio management service, or could be even in your mutual funds. But whatever you do, but in a systematic investment and periodic investment would be something suggested at this point of time, because nobody in the world can ever predict the market. But then let us also discuss about few points, what could be the positive in the market and what was the negative in the market. So talking about last week, what was the negative? So it all started with the first one, that was from the US, where the interest rates did not hike, but the Federal Reserve meeting did come out with some hawkish comments, and we could see the entire US markets falling since then. That fall has still not subsided in the US. In fact, if you look at the US market, the Nasdaq is down by almost more than 5 to 6%, whereas if you look at any of the IT stocks in the US, are all down after Accenture results also came in. So second thing again from the US was the Accenture result that came in, and Accenture is considered as a benchmark for Indian IT companies, and as Accenture results were not great, naturally we could see weakness in Indian IT companies. Most of the IT companies, including Infosys and TCS, have actually lost a lot of weight there. So that is what happened in the last week in the US. Apart from that, the most important thing to look at was the fear in the US of a shutdown. I have explained about shutdown, but let me just explain for benefit of members who have missed it. So shutdown, what happens in the shutdown is nothing but like a layoff in India. Like what you must have heard of layoff, right? What happens if a company does not have funds to or doesn't have enough work for the employees? They don't have fund to execute the work. What do? They lay off the people. That is, people are not in a position to work there. They can just come be at home, and they still get their salary at times, maybe a little salary or a proportionate salary, something like that. So what happens is basically there's no work happening. Now, why was this fear of shutdown? Because what happens is even though the ruling party is controlling the country, there is also in the US the approval needed from the opposition party for some economic requirements. But that approval never happened, and because of which there would be a financial trouble, and that would kind of take US to a situation where certain departments would go jobless for some time. That is, they will not even have to report to work because that was the situation, and that is called shutdown. So there was this fear of shutdown by 30th of September if the opposition did not agree and approve. But in the last moment, of course, if you remember what we discussed last week also, they don't allow it to shut down so easily. They have taken some urgent decisions, and shutdown was avoided and postponed for another 40-45 days. So that has kind of taken off now. So these are all the negative that we were looking at from a US perspective. Talking about India, there was nothing really negative about India, except that only thing that we could see was the crude oil prices going up. The crude oil was on a continuous rise, and it has crossed above $90 and soon close to $100 a barrel. So that is something not great for India. The second thing, the windfall tax has gone up by Indian government. So naturally, when the crude oil prices have gone up, Indian government doesn't want Indian oil refining companies to export, oil. They need oil in India. So that is something which is a condition why Indian government has increased the windfall tax on it. So that is a good thing for a country like India, but then not a good thing for Reliance, because Reliance is one of the biggest oil refineries from the country, and in such situation, Reliance, if it goes weak, can take the entire market down, because it has got the second highest weightage in the Indian stock market after HDFC Bank. So these are things which are kind of negative about the market. Now let's keep the negative aside. Let's talk about positive. What is positive? Everything else is positive. The banks are doing good, of course, in terms of profitability. Last time the results were good, right? And if you look at the next important thing, GST collection last month data has come in, which says that it has gone up again by 10% compared to last year, and the collection was almost 1.63 lakh crores. That's a great thing again. That means businesses are doing well, isn't it? The next important thing, Diwali is coming. So Diwali and Dasara is a huge festive season, and the sales of most of the goods in India, including any industry you talk about, it could be a car, it could be a home appliance, it could be any consumption stocks actually should do well, because they are expected to get good sales in this festive season in India. So it has always been a general practice that October, November, I think if you look at 10 years, more than 90% of the times, October and November markets have been positive. So that means markets can see some tendency to move positive from here. The third good thing is, right, the result season is starting from October. So October second week onwards, we'll have the major IT companies coming out with results, and other banks also coming out with results in the next couple of weeks. So the next couple of weeks, I would say almost next 1 month, the focus would be on results. And if results are coming out good, which I hope should come good, because GST data is showing positive, so that means the GST companies also should come out with decent results. Of course, only thing that would be on focus would be IT companies. What is going to happen with IT companies? So results on IT companies would be majorly in focus, and the results are expected from next week, that is from second week of October. So we can see HCL, Infosys, TCS, the major IT companies coming out with results. So they would be in major focus. If they come out well, the IT sector, which has been kind of having lackluster shine right now, might see some shine coming in, because valuation wise they are very attractive at this point of time. I'm talking about the big daddy IT companies like HCL, HCL, Infotech and Infosys, TCS, Tech Mahindra. So the heavyweight ones are decently valued at this point of time, whereas of course the mid cap and small cap IT of course has been rallying like tomorrow. So so that should be a good sign. One thing. Coming to banks again, during this time, as a lot of people finalize on real estate and cars, so the huge lending also would start coming in, and that also is a positive for banks. So banks also should see some positivity. So these are all the positive side of the upcoming weeks and months. So with this, now you decide how to judge. Is the market going down or going up? Nobody in the world can judge it. So at this point in time, that's why I say this, using of SIP mode of investment to the market at every fall is something which is important. It can happen that if you actually exit the market at this point of time, the market rallies up and then you start worrying, oh my God, I missed the opportunity. If the market falls and you're doing continuous SIP, you would only be happy that, wow, I got some more stocks or some more investment at a discount. So that would actually keep you happy, and over a longer period of time can generate wealth, because of the very reason that all these falls are temporary. Even it happens for 1 month or next 2 months or next 3 months, eventually markets will continue to go higher in the next couple of years for sure. So any investment made in stages during this time is only going to generate a great return. So that is going to make you happier. So now which one is better, enter or exit? Enter, right? So enter at a SIP mode of investment. So that is exactly what I am doing, which is exactly what we recommend in the MPA Invest. And of course, the challenge that you might face would be selecting the right portfolio, selecting the right stock, selecting the right mutual fund. But then we are there to help you. Why not just come back to us, right? Just connect with us, send us a message, go to our website mpainvest.com, schedule an appointment, and we can help you invest right. So that was, of course, a small marketing in between. So coming back to the topic. So coming to the markets are looking a little stabilized. 19,500 is a very important support to watch. So 19,500, I am not expecting it to be broken, but then of course expectations are just expectation and anticipation in market. So if at all it stays well, so that is good, and I would expect the market to kind of see some rebound, though I am not expecting, of course, 20,200 on the higher side to be broken. So if you look at the levels for this week, I would say the expiry for this week can happen between 19,300 to 20,200. The range is slightly big, but then let me tell you, this week personally I am expecting some consolidation in the market, because the market does not have a real direction until the weekend. There is no any event also that could actually trigger the market up or down. The results would start coming the next week, but of course this week is a short week because tomorrow is a holiday. Tomorrow is a Gandhi Jayanti, so we have trading opening only from Tuesday to Friday, so very short week, and the markets can just consolidate based on some international cues, if at all there can be some movement, but otherwise I'm not expecting big movement this week. But then I need to be safer on this week, because the markets have come to this level, so around 19,300 to 400, but then I can confirm by Tuesday, because once the market opens after a long weekend, Tuesday, if the markets are stable around within 19,500, there are chances the market can expire within 19,400 to 2,200. Now, why I am talking about 2,200? Well, this week 20,000 also could be a very good resistance. But then, if at all something really crops up from the US, especially I'm talking about the US, we can see chances of market actually recovering. But then, for safe players, 19,300 to 2,200. For a decent risk player, 19,400 to 20,000 is a good expiry level that can be expected for this week. We can come closer based on what happens in the market on Tuesday and Wednesday. Of course, that we will discuss as the market as we go further. Now, that is for the technical part of it for the traders. Now, coming to investors. Investors, if you are looking for long-term investment more than 3 years, for sure, you should invest in equity and nothing else. And equity is nothing but stock market. And how do you invest in stock market? The easiest is start with a mutual fund at least, right? And otherwise get into direct stocks, and of course we can help you with that. But start that. This is the right time to do that. If you have not started investing, you are going to miss out on the opportunity. Mark my words, next 3 to 5 years is going to be big for India. I have discussed multiple times why, so I'm not repeating it. But of course, I am very confident about it. The next important thing to be looking at for the results would be I would like to look at majorly few sectors. One of them is, of course, IT sector, which is very important. Two is the banking sector. Banking sector, I am expecting to be very positive, but IT sector is something which is having a dilly-dally kind of movement at this point of time. So I would be majorly focusing on the IT sector, deciding on how my investment plan should be, and of course I will share that here once I get hold of the results for these companies. So these are few things to be looking forward to next week. Apart from that, if you look at some events, we have the RBI monetary policy discussion happening on Friday. So Friday should be watched out, because the result as that comes in, markets may move violently. But then let me tell you, the expectation is that the interest rate hike will not happen, neither reduction will happen. It would be status quo. So that is the expectation. So if any change apart from that, the most important thing would be the comments coming in from Mr. Shaktikanta Das from from the RBI. So that would be in focus. Any hawkish comments can actually trigger the market down, that too on a Friday. So that could be possible. But till Friday, there's no big event, and naturally the new month has started, so new sales data and GDP data and all the will start coming in. So focus will be on all these data. So market can move specific to all these data, but then next week is what we need to be careful about, because based on each sector results, the markets can have violent movements. So this week is kind of calm compared to next week is what I can expect. So, well, coming to all these things, I would say investing is a great way to, and a SIP mode of investing is a great way. Even a newbie, with closed eyes can start investing into good companies, good portfolios, and you're sure to make a lot of money in this. A lot of money in the sense, at least 10 to 12% is something which, is double what you get in a bank or FD. Isn't that a great investment? So that is something I am expecting. Again, I'm not a SEBI analyst, but then I'm talking about my experience in the market. I'm just sharing it for your knowledge. I'm sure, I have made money out of it. So anybody can make out of it. So it's something like, simple as starting to do it. So it is the most important thing is to start investing rather than anything else, right? So that is it for now. I think let me check if we have any questions. If you have any questions, of course you can post it in the group and in our live chat, and of course I could answer them, or you could just put it in the comment box simple, and we could answer that. So that's it for now. MPA family members, let us catch up at 7:30 with our regular meeting. That's an opportunity, privilege to the MPA family members. You could be part of MPA family as well. All you need to do is connect with us and we'll help you join that. So that's it for now. This is Srikanth Rajan, wishing you all a great week ahead. Wishing you a happy Gandhi Jayanti for tomorrow. Let us catch up with more details on the podcast on Tuesday. Goodbye. See you. Hey, do remember to press the like button. See you then.